brighter futures with smarter steels.
Welcome back. Well, for now, the Bank Nifty is under a tad bit of pressure, but other than that, it's a very quiet market, you'd have to say. A lot of stocks in the insurance space are doing well this morning. So whether it's GIC, New India Assurance, all up in the green. Something like a Manappuram Finance is also up about 3.5%. A lot of PSU banks are doing well. Bank of Maharashtra, UCO, Union, Central Bank, Bank of India are all up in the green, anywhere between 2 to about 4%. That space also looking pretty good. And fertilizers are inching up higher this morning. So NFL is up almost 2.5%, and RCF, FACT are also a couple of other names. In fact, talking about fertilizers, commodities, let's now go across to Manisha Gupta. Manisha, good morning again. What's the one commodity you're looking at today?
Well, I'm looking at the metal prices right now because we seem to be closing this year in the negative for many of those metal prices. You know, we started this year with the first quarter giving us all-time highs to multi-year highs, and then came a correction with demand concerns there. But in the last quarter of this year, there is some buying that we've seen come back yet again. But even with that, we are way off the highs, and we are headed for a negative closing for 2022 there. Well, a couple of reasons clearly have been, one, the recession concerns, the slowdown, the weak economic data that we still continue to see from major consuming countries. And the second has been the aggressive central bank tightening are some of the factors that we are carrying forward in 2023 as well. And then the markets also are looking at the expectation from the currency cues, the rising COVID cases, restrictions from other countries. So there's as much uncertainty that you can see or fathom is what we are entering the new year with. Also, take a look at the in China, where the numbers continue to be on the weaker side. The new home sales in this year are down by 30%, but China has done a lot in way of stimulus until now, and expectations that as 2023 begins, there could be some more measures coming in from China. As of now, we have commercial banks extending $162 billion as new credit lines. There have been liquidity injections as well. China also has lifted a ban on equity refinancing for property companies there. And then there also is support in sense of cash numbers there and infrastructure that is going on till 2025 and 27. It is the weak prices from the companies that seems to be putting pressure on their margins as well. So whether it's about Glencore, Alcoa, Norlisk, they have all spoken about lower metal prices and how they're curbing production going forward, especially in the first quarter of 2023 there. If you look at the 2023 itself, the markets do believe that we will start slightly on the weaker side, but by the second half of this next year, you could be looking at demand coming back. Economy is doing well, renewables and EV demand also picking up into the market. Those demand expectations are on the stronger side, so that could perhaps be supportive into the markets. But a report card of what we have done until now in the markets there. So even as we saw all-time highs in case of copper, aluminum and nickel, we are closing this year in the negative for copper and aluminum by 14 to 15%. And for the year, we're down between 20 to 40% for both of these metals there. Nickel did see an all-time high, and we still are 46% on the higher side for the year. But from the highs, we are down by nearly 35% on that as well. And this is what the ferrous metals have done after all that volatility that you saw in this year. We are closing flat for iron ore, and steel is in negative by 11%.
All right, Manisha, thanks a lot for getting us that complete recap on the metal space. But let's also talk about the retail space now. The Retailers Association of India says that India saw sales across sectors grow nearly 20% more than what we saw pre-pandemic.